Hello again, everybody. This is Jeremy Wagner of Daily FX Education, and I want to welcome you here to FX Street and to this webinar, which is on high probability breakout trading. And today we've got a lot of great things to talk about. It's been a heavy newsy week, and so there's been a lot of event risk going on out into the market, which tends to mean that there's a calm market. And if you've been watching the euro dollar, it's been anything but calm. But regardless of whether it's a calm market or whether there's volatility out there, we're going to talk about breakouts, and we've got some setups that are right on top of us right now. So what you're going to be walking away from in this webinar is what breakouts are, how to identify them, but more importantly, how to identify the higher probability breakouts. So we'll be getting into that. I've got a question I'm going to be asking you guys here later on, about 20 minutes or so into the presentation. So again, my name is Jeremy Wagner, and I'm a part of Daily FX Education, and we do webinars like this, similar to this, inside Daily FX Plus, and I'll have some more discussion on that here at the end of this presentation, where you can go to learn more information. But if you could just take a moment and read this risk disclaimer, and then we'll get going, diving into breakouts, and then talking specifically about some charts, namely the euro dollar and the Kiwi dollar, and a couple of others that I'm going to get into in a moment. And by the way, I know you guys are very familiar with this room, and this is meant to be an interactive session. So as we go along, go ahead and type those comments into the chat box. I will take questions throughout the course of the presentation, so type those questions in. And I may not take the questions in order, but I do want to make sure that you get your question answered over the next 45 minutes. So here's what we're going to be going over today. We're going to be talking about breakouts. What are breakout trades? How do you identify them on a chart? What are the benefits of a breakout type of strategy? And there are some benefits that you may not be completely aware of, but after we discuss these benefits, I think you might want to start adding a breakout type of strategy into your repertoire. And then we're going to talk about what makes a breakout trade higher probability. And then, of course, we're going to go out to the live charts, take a look at some live charts, trade setups, and then I've got an interactive question that I'm going to ask you here in about 20 minutes. So let's go ahead and run out to the charts. Just a moment. Let me change over. All right, there we go. So right now you should be seeing a daily chart on the euro dollar. And as many of you know, earlier this morning, Jean-Claude Trichet came out with the interest rate decision for the ECB. They decided to go ahead and bump up their interest rates by 25 basis points. So leading up to this announcement, there was a lot of volatility in the euro dollar. You can see from this daily chart it's been bouncing up and down within a wide range. And so Trichet was talking about some headwinds coming up. Of course, we've had the debt downgrade by Moody's for Portugal, and their debt being downgraded to junk. And Trichet, although they hiked the interest rates, had a bit of a hawkish tone, saying, you know what, guys, I don't know what's going on. We're just going to sit on our hands here for a little while and just see what happens, which means they're likely going to be doing nothing. And it was just essentially a wait-and-see approach. And one other thing that did come out as well is that they suspended the collateral requirements for Portugal because they didn't want what was happening to Portugal to spread out throughout the region and become a contagion. So in light of all of that, it was a very hawkish type of tone to the meeting, and so therefore you would have thought that this euro dollar rate would have plummeted. And it did sell off initially on the news, and it's just been trading sideways. Perhaps this is because we've got arguably one of the largest market-moving events coming out tomorrow, and that is the non-farm payrolls for the U.S. dollar. And so, therefore, the large traders are possibly sitting on their hands, waiting for this week to go by so that they can digest what's been taking place this week in order to initiate a strategy for next week. So, in essence, the market's just been bouncing up and down in a very wide range. So 1 minute it looks like it's risk on, another minute it looks like it's risk off, and if you've been trading the euro dollar over the last couple of days, you've probably been pulling your hair out wondering, oh my gosh, how in the world Do I make sense of any of this? And that's where breakout trades can come into play, in that you don't necessarily even have to be familiar with fundamentals to be able to trade a breakout type of strategy. As far as my personal flavor, my personality when it comes to trading, fundamentals factor in very little into my trades because I look at the fundamentals as being factored in on the chart. Whatever happens fundamentally is going to show up on the chart, and therefore I'm going to let the chart dictate to me what's going on. And a breakout type of strategy fits well into that type of a mold. So for example, I've got two lines on my chart. I've got this horizontal green line, got this horizontal red line. These are very important lines that I'm watching on the euro dollar. Anything that's happening in between is really noise, and until one of these lines breaks, then I'm a little bit at a loss as to where the euro dollar might be going. And one possible interpretation here is that we've got this much larger triangle. We'll divide in 5 waves. We've got an A wave down, B up, C, D. So this very possibly could be a wave E. And if this wave never breaks down below this green line, then that means we are likely going to see a thrust higher, and it may even break up above this red line. And so in essence, instead of trying to predict where this price is going to go, I'm going to let price dictate to me where it wants to go. So we have support and resistance on my chart. My green line is support, my red line is resistance, and what a breakout type of trade is going to do is it is going to sell on a break of support. It's going to buy on a break of resistance. So a breakout style of trading is exactly opposite as to what you hear when it comes to buy low and sell high. Well, on breakout trading, you want to sell lower and you want to buy higher. And we're going to buy on a break of resistance and sell on a break of support. So the way that I would place an entry order on this trade is I would place an entry order to go short 1 pip below this green line, which is the low of this hammer candle. 1 pip below this green line, place an entry order. If price touches that particular price, in this case it's 140.72, then that means prices have traded at a level that it hasn't traded at since June the 16th. And likewise, if we get a break up above this red line, that's 146.95, and so I'd place an entry order to go long at 146.96. If prices break up into that level, that means prices have traded at a level that hasn't been seen since early June. And so we're letting price dictate to us where it wants to go. So that's one of the benefits of trading with a breakout strategy is you let the price tell you where it wants to go and you simply follow. It's price action based rather than indicator based. A lot of your indicators such as MACD, Bollinger Bands, RSI, Stochastics, CCI, those are all very good indicators. And they do very good things, but they also tend to lag the market because there's several different candles that it's drawing in order to create these derivations of moving averages. Whereas a breakout style of trading is purely based on price. You don't have to have an indicator available, although there are strategies out there that will use like price channels or Daunting channels to help you identify entries and exits. And as a matter of fact, we've got a strategy for that as well that we teach in Daily FX education. But you don't necessarily have to have those. All you need to do is eyeball a chart like what I'm doing right now and identifying levels of support and resistance and then place a trade or place an entry order on a break of that support, a break below that support going short, or a break up above resistance going long. And we've got a question here, Boyke, saying, are Elliott Wave not supposed, EW, I assume that's Elliott Wave, is that not supposed to be on trends only? These labels that I have out here are Elliott Wave labels. It's really not a part of the presentation here. So it's not that important whether you're familiar with Elliott Wave or whether you're not. But basically this triangle pattern is a consolidation type of pattern. If this holds true, that means there would be a thrust to the upside. And it very likely would clear this high right here. But until we won't know that's the case until we get a break of this red line or until we get a break of this this high here in May. And by then, The trend may be too mature, may be late, may be over. So going long the euro is going to be a very precarious position right now. So therefore, I've got my sights set on looking for a short trade, and a break below this green line is where I would look to place a short trade, one pip below, because of all these situations that are going on over in the Eurozone with Greece and Portugal and Spain and Ireland. These are not new problems. They've been around for a very long time, and it's just that now people are starting to take notice of what's going on with Greece and Spain and Portugal. Now, what I would do in this case on placing a stop is I would dial down to a smaller time frame chart. So I'm going to dial down to a, like a 1 hour or a 2 hour chart. Here we are with a 2 hour chart. Here's my green line down below here. And as prices come down to approach the green line, what I'm going to do is I'm going to place a stop just up above a swing high. So I can't really tell you right now where the stop would be placed. Once prices get closer to my break, at that point I'll be able to identify the closest or the lowest swing high, and I would place my stop just up above there. And then the way you would want to manage the trade is you would manage the trade by doing a manual trailing stop, or you would simply look at twice that distance to your stop and use that as your take profit level. All right, there, I refreshed the screen. Sorry about that, Snoop and guys. And how do you know which are the better support and resistance levels? That's a very good question. And this is where we get into what makes a higher probability trade. Because obviously, you and I can look at the chart and we may come up with different support and resistance levels. Just a second here. All right, so let's try this now. See if you guys can see the chart. So here's the 2 hour chart that I was sharing with you. And so like I was saying, we may come up with different levels of support and resistance. So how do we come to grips with that? What is the right support and resistance level? And there really is no right or support and resistance level. And this is where the high probability comes in the name of the webinar. How do we know it's a high probability breakout trade? And high probability breakout trade is when we can filter these trades in the direction of the trend. So if I'm going to be looking at the trend on a daily chart, then I'm going to look on a 1 hour, a 2 hour chart for my support and resistance levels, and I want to filter my trades in the direction of that trend. So in the case of the euro, I'm going to change back to a daily chart. Because some people may be looking at this daily chart and be like, hey bud, this looks like an uptrend to me, so why in the world are you looking for a downtrend? Why are you looking for a sell short? Why are you looking for a break below support? And actually, the reason for that is because if you scroll back and actually take a longer look at the euro dollar, and let me go ahead and turn this camera back on. This is a weekly chart of the euro dollar. And you'll notice that since 2008, the highs in 2008, we've been seeing a series of lower highs and lower lows. And indeed, this high right here was lower than the previous high. So we've got lower highs and lower lows. And so therefore, this is in essence a longer-term downtrend. Remember I talked about the situation in Greece and Portugal and Spain and Ireland and Euro. That stuff has not been going on just in the past, it has not been going on just in the past couple of weeks or months. It's been going on for several years. They got into this problem over the course of several years, and it's probably going to take us several years in order for them to get out of this particular problem. So overall, I'm looking at this as being a downtrend. And that gets me to the other part of the situation, the other benefit to trading breakouts. Now, I'm getting some comments here that the top part of this is black. So is the whole chart available? This is a euro dollar going back to late 2007. Is the whole chart available for you able to see? Okay, awesome. The other benefit, one of the benefits I mentioned is that it's price action based. The second benefit, and this is something that many breakout traders do not appreciate. So you want to lean up close to your monitor and get a good grasp of what I'm about to say. What really makes breakout style of trading very powerful is that it can keep you out of losing trades. Of course, that's very interesting. As a trader, there's two things I'm looking for. Number one, I want to be entered into winning trades. Second thing I want as a trader, I want to be kept out of losing trades, and a breakout style of trading can help in that endeavor. How can it help in that endeavor? Well, for that, I'm going to go back to the daily chart. So I'm going to turn off my camera, turn it back on here, and when it turns back on, you are going to be taking a look at the daily chart on the euro dollar. Here's the daily chart on the euro dollar. Remember, I've established that the overall longer-term trend of the euro dollar is to the downside. And right now it's just chopping around. And if we do get a thrust higher, we get a break higher, we could play a breakout trade going long. But I'm more interested in the longer-term prospects of the euro. It doesn't look good for the home team. There's a lot of speculation that the eurozone is going to break up, and I think that is a very real possibility. So therefore, that is very bearish for the euro. And in this case, what I would be looking to do is really eyeball this short trade. So let's say my idea is I want to go short at 140.70 and on a breakout going short. So let's say prices bounce around and it never makes it to 140.70. Well, as you can see, I was wrong on my trade idea because let's say prices move higher, they break 147. I was wrong on my trade idea. I wanted prices to break below 140.70 and go short. It never did. I was wrong. However, I was kept out of a losing trade. Whereas if I think that the euro is going to disintegrate, and if I think that it's going to break up, and if I think that the euro dollar is going to move lower from here, and I go ahead and enter into the trade at market, and then the price moves higher up to 147, well, guess what? I have just incurred a losing trade. So that's one thing that if you really practice the style of breakout trading, you will find out that it can keep you out of losing trades. And what take profit would you keep if it breaks support or resistance? Two different ways that I would manage it. Number one is you could use a straight risk-to-reward ratio, a 1-to-2 risk-to-reward ratio. And the second one is manually trail your stops, where in essence there is no take profit. Now, what would I do in the case of the euro dollar? In this case, since I do have some additional levels of support on below, I would probably lean more towards the straight stop, straight limit. Okay? Whereas if I'm doing a breakout to multi-decade highs or a breakdown below multi-decade lows, I would do a manually trailing stop. And I'm going to talk more about that here in a moment. So we'll get back to that here in a second. Actually, let's go ahead and let's dive right into it. I'm going to change my chart over to the New Zealand US dollar. So let me turn this cam off and back on. Here's the New Zealand US dollar. Okay, on the daily chart you can see we have a very nice trend to the upside. So therefore, if I were going to make my breakout strategy a higher probability breakout strategy, what direction do I want to filter my trades? So I want you guys to go ahead and type that into the chat box. So again, in order to play a breakout strategy, I would look for levels of support and resistance. In this case, resistance would be around 83.34. Support would, the first level of minor support would be this 82.31, and then a more important support level is going to be down here around 79.72. So if I were going to trade this, make this breakout strategy a higher probability breakout strategy, what would I want to do? And you guys are exactly right. I would want to go long. So that means I would disregard my short trade. I would simply look for long trades. Now, I'm going to try to draw some lines on the chart, so hopefully this will show up here. And you guys are still able to see my screen. So here's a level of support and resistance. They're both black lines. Are you guys still able to see my screen okay? Or do I need to refresh the camera? Looks like everything's all right. Not able to see the black lines? All right, let me turn it off, turn it back on. Okay. So here's our support and resistance levels. In the case of the New Zealand US dollar, I'm going to filter my trades so that I'm looking for the long trade. So this is where I'm going to want to go long at. And so in essence, since we are pretty close to this trade right now, how I would manage this trade, where I would place my stop, is I would scale down to a smaller time frame chart. So I'm going to scale down to a 2-hour chart. And you can see that this black line still shows up on this 2-hour chart. And so where I'm going to place my stop is just below these lows. So remember, I'm playing a breakout 1 pip up above these highs. So I'm going to go long at 83.34. If price is successful in breaking up to 83.34, and then I'm going to place a stop just below these lows. So I'm going to place a stop here around 82.25. So let me go ahead. I'm going to place this order into my account here. So you should be able to see this pop-up box that says create an entry order. I want to buy 10,000 units of currency, 83.34. I'm going to place my stop at 82.25 and press OK. And so there's my entry going long. There's my stop loss. And right now I'm taking a look at the 2-hour time frame, Harley. Now, the smallest time frame that I would scale down to, I would say a 1 hour, because the chart's going to look very similar whether you're using a 1 hour, a 2 hour, a 4 hour. It's all going to be very similar. So you can use any of those time frames to scale down to. Now, what's special about this New Zealand trade? There's a couple of things. Number one is, I don't know if you guys are familiar with the SSI, the Speculative Sentiment Index. This is a proprietary indicator that is unique to FXCM and Daily FX. What we've done, we've gone out to all of our retail traders, and we've identified what side of the trades that they're on. Are they on the long side of a euro-dollar trade? Are they on the short side of a euro-dollar trade? Are they on the long side of a pound New Zealand US dollar trade, or on the short side of the New Zealand US dollar trade? And it's proprietary. It's available to all live account holders of FXCM. I'm going to share a figure with you right now that's proprietary information about using this indicator. It's not proprietary information. It's using this proprietary indicator, and that is SSI. And that is on the New Zealand US dollar. There are 5 times as many traders at FXCM who are short the New Zealand US dollar for every trader that is long. Now, if you're a sentiment trader, what would that tell you? If you have 5 times as many traders who are short the New Zealand US dollar, what does that tell you as a sentiment trader? So I don't know if we have any sentiment traders out there. If you guys want to go ahead and chime in and let me know. And then while you guys are chiming in, I'm going to change my chart here on the New Zealand to a different time frame. I'm going to take a look at the monthly chart while you guys are typing that into the chat box. Okay, so here we go. So for a sentiment trader, Boyke's exactly right. When you have 5 times as many traders going in one direction, especially when they're trading against the trend, like what we're seeing here on the New Zealand US dollar, then what you want to do is you want to do the opposite. That means in that case, when you have 5 times as many traders going short, that means that we want to go long. And that's exactly what we're doing here. So this is how we're creating high probability in our breakout scenarios. Is it possible that this breakout trade can become a losing trade? Absolutely, it's possible. However, we're using a couple of things to shift the boat in our favor, shift the probabilities in our favor to give us a higher probability trade. So for the traders that are going short, they're essentially trying to pick a top on the New Zealand dollar. Now, the New Zealand US dollar is trading at levels that hasn't even been seen on this chart. This chart goes back to 1995. This is 16 years worth of data. Prices are trading at levels that have not been seen anywhere on this chart. And this chart covers 16 years. And so why would you want to push against this trend? This is a nice, strong trend to the upside. Let it go ahead and carry your trade. So we're going to look to go long the New Zealand US dollar. And one other thing that helps make this SSI effective when we trade in the opposite fashion, the way that Boyke has mentioned, we go long when 5 times as many traders are going short. What makes this special is guess where these folks are going to have their stops. Guess what they have to do in order to close out these short trades. They've got to buy it back. And they're going to have their stops up above the recent highs. So if prices are successful in pushing up into those levels, well, then this could potentially add some rocket fuel to our trade in going long, because we're already going to be long the trade. And then these traders are going to have to buy back because they're going to be assuming a loss position. And then maybe they already have their stop loss set, and the stop loss is up above the current price level. And so the stops start getting rung. And so you could see how prices could really move in a hurry. And so, again, this is how we can create and help bring some higher probability to our breakout type of strategy. So I really like this trade in going long the New Zealand US dollar. Now, again, one of the benefits is that a breakout type of trade can keep us out of losing trades. So if these 5 times as many traders, let's assume they are correct, and prices drop from the current levels, well, you know what? We never got entered into that losing trade, and therefore we did not incur any loss in our account. So again, that's the power behind a breakout style of trading. So I've talked about the euro dollar and going short. I've talked about the New Zealand dollar and going long. So let me throw this question out to you guys. What cross pair would we look at if I was looking to go euro dollar short and New Zealand US dollar going long? What cross pair would I want to look at for another potential trade opportunity? Go ahead and type that into the chat box as well. And I'm going to change my chart here for a moment. Just a moment here. I'm going to be looking at a daily chart on the euro New Zealand dollar. Because if I was looking to go the euro dollar short, and if I was looking to go New Zealand US dollar long, that means that the euro New Zealand dollar should be a very good short trade. And Aviator, Boyke, you guys are absolutely right. So let me throw my chart back on the screen. Here we go. Here's the euro New Zealand dollar. And you can see here that we did have a significant level of support. Prices just recently broke down below through the support. So we're pretty close to this support level of 173.50. And, if you want to see if prices can push a little bit higher, maybe enter into a short trade, that would be a good way to manage this. Now, let me dial down to a 1-hour chart here, and let me share with you how we would, or where we would place a stop. So let's say you were successful in placing this trade going short on a break below this black line, where you would place a stop initially, you would place it up above a swing high. So place it up here around the 176 level. As prices have moved lower and we're starting to get lower swing highs, well, then you would move that stop in tighter. So in essence, you could place your stop. If you were successful in getting into that breakout trade, you could move your stop just up above the swing high, and therefore, if you get stopped out, you'd only be stopped out of a very small trade. So here's the New Zealand US dollar. And again, if we get prices moving back up near this black line, could be another opportunity to enter into this trade going short. It's going to be a lower probability trade at that time because prices have already broken through. It's already retested what was support, has become new resistance. It's already retested that a couple of times. So the more it comes up and retests this black line, the weaker the black line is going to become. Adam's asking about, what about a false breakout? We can never tell for sure if a breakout is going to be false or not, or whether it's going to be successful. That's why we want to use some of these other tools to help make it a higher probability trade. That is trading it in the direction of the trend. And then in this case, if you've got tools like Sentiment or SSI available, then utilizing that information to help you out as well. So the setup that we saw in the New Zealand US dollar, those are the types of setups that we haven't had very many of those in a long time, by the way. It's probably been about a year. But when we do get setups like that, I lick my chops because those are very good opportunities. Now, we do have event risk tomorrow morning in non-farm payrolls. That could jostle the U.S. dollar around. That could throw this New Zealand dollar into a little bit of volatility here. So we'll have to be very careful about that. And if the price of the New Zealand US dollar goes nowhere for the next several hours, well, then what I would do is I would just wait until after the news event and then go ahead and trade accordingly in that New Zealand US dollar on breakout going long. But I do have a question here that I do want to share with you guys, and it's going to be along the lines of identifying what is a higher probability trade or coming up with a higher probability trade. That's a question we get a lot in our educational offerings, is because we offer 17 different strategies that we teach. And then there's another 6 strategies that are available from an automated standpoint. So we have a lot of strategies at our fingertips, but rather than just giving somebody a fishing pole, or rather than just giving somebody fish, we like to give them the fishing pole and teach them how to go fish. And so one of the questions we get quite often is using the right strategy in the right market environment, making it a higher probability strategy. Because if you use this strategy on any currency pair out there, well, it's not going to be as good as if you go out and cherry pick where to use this strategy. If you trade this strategy on the euro dollar and solely on the euro dollar, I could probably almost guarantee you that you're not going to have that great of results, over the long run. But if you take the same strategy and if you apply it to those currency pairs, to those financial instruments that have a greater probability of a breakout, well, then you're starting to bring more consistency to your trading. You're starting to bring some higher probability edge to your strategy. I heard most breakouts fail. Your comments, Boyke. I would say that there is some truth to that. Again, if it gets back to if all I do is trade a breakout strategy on X pair, all I do is trade breakouts on the dollar CAD, well then, yeah, I'm going to say a lot of times that's going to fail. And let me show you why here. Let me just pull up the dollar CAD. And let's just take a look at a 4-hour chart on the dollar CAD. Okay, here's a 4-hour chart on the dollar CAD. Breakouts work very well when you have a trend or momentum type of environment. And you can see here, a 4-hour chart on the dollar CAD, it's been trading sideways. So trading a breakout on this currency pair means you're likely going to be taking on water. You're likely going to be experiencing some losses. So what we want to do to bring high probability to this strategy, and it's not just this strategy, you could apply this concept to any strategy, including your own. Find out what type of market environment it does well in, and then go out and cherry pick currency pairs in that environment. So, in the case of a breakout type of trade, you want to find a strong trending move. And so to help illustrate this strong trending move, I've got a question I'm going to ask you guys. I'm going to share a couple of different charts for you. First one here, we got the pound CAD. Are you guys able to see the pound CAD all right? This is a daily chart. The pound Canadian dollar across, not very many people trade it. It's generally been a fairly good trading instrument for most of our traders. So if I were going to trade this on a breakout, notice I've got this very significant support level at 152.95. We're about 20 pips above it right now. Okay, so I got this green line. If prices are successful in breaking below this green line, and it's very close to it right now, then we would have a breakout trade going short. Okay? So if you had to choose between the pound CAD, let's say you could only place one trade, and you had to choose between the pound CAD, and here's the pound New Zealand. So let me know if you guys are able to see this okay. And you can see here on the pound New Zealand, my trend is to the downside. Therefore, I'm going to filter my trades in the direction of going short. And so what I would do here is I would place a short trade going below the low of this red candle from June the 30th. So that means around 192.61. We're already 40 pips below that level. So let's say it was earlier today, prices hadn't broken down below there. So if you had to choose between that, if you had to choose between the pound New Zealand or the pound Aussie, if you had to choose between these three currency pairs to trade on a breakout, and the way we would trade this breakout on the pound Aussie is you would have an entry order to go low just below these lows, and then earlier today it did break down below, but let's say it was earlier today, you're analyzing this market. We know a little bit about hindsight now, but which of these three currency pairs, you can only place one trade, which of these three currency pairs would you place a breakout trade on? Would it be the pound CAD, which is this guy right here? Would you play a breakout trade on the pound New Zealand, which is this guy right here? Or the pound Aussie, which is this guy right here? So go ahead and type that into the chat box. We'll give you guys a minute or so to get that in there. You would abstain, Snoop. And while you guys are doing that, I'm going to try to scroll up here, see if I missed any questions up top. Snoop, your earlier question, I suppose you don't wait for a candle to close above or below the lines. That's correct. I'm just waiting for price to dictate when it's entered into that price zone, and then I enter based on price. So I'm not looking for any confirmation, meaning I'm not waiting for the candle to close. Because oftentimes what we found out is that if you get a very strong and powerful breakout, which tends to follow through, well, you've given up some pips on the entry. So I would much rather enter into some false breaks, get a couple of stabs at it, and have a tighter stop. And when I do catch that strong breakout, be able to collect all those 10, 20, 30, 40 pips that I may lose if I'm being conservative. So I'm just going to enter on that trade when a price hits the particular area. So entry orders is a great way to go ahead and trade with this strategy. All right, so D-Dub says they're going to phone a friend. I like that. Harley on the lifeline. You guys are hilarious. So when you guys do stand-up comedy, let me know. I'd like to come watch you guys. But anyway, so yeah, the question again, and again, this is an important concept that whether you're trading breakouts or whether you're going to trade it with your own strategy, this is a concept you're going to want to apply to any strategy you trade. This is a concept that's going to help bring high probability to your strategy. So today's webinar is high probability breakout trading. Well, maybe your strategy, maybe you like CCI trading. So what you can do, this is what I'm going to do to create high probability CCI trading, high probability MACD trading, high probability RSI trading. So this is what you want to do, is you want to find the strongest of the trends. And sure enough, the pound CAD, this guy right here, the pound New Zealand, this guy right here, and the pound Aussie, this guy right here, are all in very strong trends, very nice moves to the downside. So these are good selections, and we're faced as a trader. I have limited capital. I can only make one trade. Which one do I trade? Well, let's digest these one by one. So what I'm going to do is I'm going to have about 12 months worth of data on my chart. So we go from about last July to the current July, 12 months of data. And what I'm going to do is I'm going to look and gauge the strength of the trend. Because if I find the stronger trend, remember what makes this high probability is a strong trend. If I can identify the one that's in the strongest trend, then I'm going to help bring high probability to my breakout trade. So here's the pound CAD. About 12 months ago, the pound CAD was trading around the 152 level, 151. It's currently now at 153, so it's 1 to 200 pips above where it was 12 months ago. All right, so this trend is basically trendless. It's basically in a sideways range. Let's move on to the pound Kiwi, and let's zoom this in through July of last year to current. And July of last year it was around 211. Currently it's trading at 192. 1,900 pips in the last 12 months on the pound New Zealand. Compare that to the pound CAD. The pound CAD was up. It was in the wrong direction. It moved up 100, 200 pips. So if I had to choose between the pound New Zealand and the pound Canadian, I'm going to choose the pound New Zealand because it's been in a much stronger trend. 1,900 pips in the last year, and actually it's been about even more than that if you count since March. Since March, it's been just over 3,000 pips. Let's move on to the pound Aussie. This is July of last year to July of this year, and at that time it was around 180. Now it's around 148, and if my calculation is correct, that's about a 3,100 pip move. So if I had to choose between all three of these currency pairs, and all of them are good selections, if you chose the pound Canadian to go short on a breakout, that's a reasonable trade. There's nothing wrong with that trade idea. If you decided to go short the pound New Zealand, again, very nice trend to the downside. Nothing wrong with it. Good trade idea. But if I had to place my capital on only one of these, it would be the pound Aussie. Because the trend is much stronger. I'm going to have a much greater opportunity for a breakout to the downside. And so therefore, I want to bring these probabilities into my favor. And so trading a breakout on the pound Aussie is where I would place my capital. And so again, it's already earlier today, a couple hours ago, it broke down below this 48.90 level, so we're about 60 pips below that. We could wait for some type of retracement back to that 48.80 level, because what was former support at 48.80 tends to act like new resistance into the future. And so that could be a point of resistance that we could sell into the future. Or we could just continue to sell new lows on this currency pair. Now, where are we going to place a stop on this? Let me move this down to a smaller time frame chart. Let's move it down to a 2-hour chart. And you should be able to see that right now, a 2-hour chart. I'm going to place it just up above a swing high, so the conservative stop is going to be here at 150.73. If you want to be a little more aggressive, you can place it just up above the wick of this candle right here, 149.20. So it just depends on whether you're more aggressive or more conservative. Either one is okay. If you're more aggressive, that means there's a greater chance you're going to get stopped out of the trade because your stop is a lot tighter. A lot of people think that your risk is where you place your stop. And yeah, there's some truth to that, but if you place your stop 10 pips away, and if you get stopped out all the time, well, you're basically risking everything because you have a very low probability trade. So risk, in its truest sense, is how much capital am I risking? What's my dollar amount of my account that I'm going to lose if I'm wrong on this trade? And that's a function of where your stop is and your trade size. So we talk about not risking more than 5% of your account on all open trades. And so if you're going to be more conservative, place your stop up here. Some people may be thinking, my goodness, that is 250 pips. I'm not placing a stop 250 pips away. Hey, that's fine. But, if you trade the smallest trade size, and maybe you could trade a micro lot, that's $25. $25 is not a large amount. And the other benefit of the pound Aussie trade is you got rollover. So even if this goes nowhere, so for example, in a micro lot, I think we're paying about 1 pip's worth of rollover to go short the pound Aussie. So that means for every day you hold the pound Aussie open, that's like an extra pip that's getting chunked into your account. So it's about 11 cents for a micro. It's about $1.10 for a 10K position. So Len says, knowing that many breakouts are false breakouts, do you trade the breakout or wait for a retest? You can trade it either way. If it's a false breakout, either your breakout or your retest is going to turn into a losing trade anyway. Because what a false breakout means, a false breakout would be something like this. Prices break down below, and then they immediately move higher, much higher than where your breakout point was. But when we get a retest, that's essentially where it would be right here on the chart. Let me give you a good example of a retest, or a potential retest. So you see here, oops. All right, you should be able to see this chart here with this black line running right through the middle. You see here that when prices did break below this black line, notice that eventually it came back and came close to retesting it. This is a successful retest. This is a break with a retest. If you get something like this, where you're breaking below, there is no retest. It's just moving straight up above. And so right now, we're kind of hovering around being a successful breakout. If we do get a retest back up into the 148.80 level, then that could be a potential area to sell short into. Ideally, I'd like to see a little more separation from that 48.80 level. But it could be a potential retest if you miss this trade. Is 1 pip not too little? Again, all I'm doing is I'm looking for prices to trade, even if but 1 pip at a place that it hasn't traded at in a long time. So on the pound Aussie, does anybody know when the last time we've seen prices at the 148 level on the pound Aussie? Does anybody know when the last time the pound Aussie's seen 148 level? It's been a very long time. It was a 30-year breakout here, gosh, several months ago. So let me go out to a daily chart. I'm trying to remember where that 30-year breakout was. I think it was up here at the 2 level. I think at the 200 level on the pound Aussie, I think that was a 30-year point. That when prices broke through there, it was trading at levels it hadn't seen in 30 years. Look what's happened since then. Another 5,000 pips to the downside. No, that wasn't it. It was earlier. Must have been at this low right here, 162. Anyway, it's been a very, very long time. And what this is essentially saying is, again, when prices are trading at levels that they haven't traded at before, we'll go with it. Simply continue to follow the trend. That's exactly what we're doing on the New Zealand US dollar as well. Is we're just simply letting the trend telling us where it wants to go, and then we're following. So can there be noise if you got 1 pip? Sure, there might be. There are going to be losing trades. Don't let me think that I'm fooling you into something that doesn't exist. Yes, there will be losing trades. There is not a strategy out there that is going to prevent you from having and taking on losing trades. So there is losing trades by trading this way. But what we're doing is we're trying to bring the probabilities to our side, and by doing that, we're going to look for the strongest trends out into the market. Is 1 pip too close? Yeah, maybe I'm going to take on some losing trades, but there are going to be very strong trends like what we see here. There are going to be very strong breakouts, and why give up 4 or 5 pips? Because it really isn't going to shelter us much. I mean, there have been wicks. I've seen wicks go several, 10, 20 pips. So if you're trading on a 10 or 20 pip cushion all the time, well, think of all those trades that you're giving up on 10 or 20 pips. For me, I just want to give up 1 pip, and that's it. All right, we are approaching here the end here, so let me just give you a couple of pieces of information additionally, and I still have time for a couple more questions. But basically, we do have specific strategies that use a breakout style of trading. One of them is called the Daunting channel strategy. I know, it's very creative. And it uses strategy. It's got specific price points where you can enter, where you can exit. So I think the question we had earlier is, well, how do I know where the support or resistance level's been? And, each of us looking at the chart may come up with different support and resistance levels. But this strategy has specific areas where you can enter, specific areas where you exit. And so therefore, the big decision that you have to bring is what currency pair do I apply it to? And you want to apply it to the strongest trending move. And I've shown you here, by virtue of this pound CAD, pound New Zealand, pound Aussie, I've shown you how to identify strong trends. And so if you apply that strategy to stronger trends, you're going to help bring an edge and a higher probability to these trades. But we've got this strategy, and we've got a live webinar that we're doing on it tomorrow. So since we're here at FX Street, I want to give you guys a special invite to that live instruction on how to utilize that strategy. It's usually locked up, closed off to live account holders of FXCM. But if you are interested, then what I want you to do, I'm going to turn off the camera real quick. If you're interested, what I want you to do is just send me an email. It's jwagner@fxcm.com. And just say, hey, I want to participate in that live instruction on the breakout strategy tomorrow. It's Friday. It's going to be Friday. It's at 1700 GMT is when that webinar takes place. That's 1 o'clock Eastern Time in the U.S. Also, I have an authorization to give away some free logins to DailyFX Plus. This is the enhanced suite of dailyfx.com. It is available to all live account holders of FXCM. And what you gain access to with this login is you gain access to 17 strategies that we teach in our education team, and that Daunting channel strategy is one of them. There's a couple other breakout strategies that we go over as well. You got 17 strategies in total. You're also going to have access to 6 automated strategies that you can trade those signals. But more importantly, we do 20 to 25 live webinars each week where we share with traders not only what the strategy is, but when and how to use it. That is the most important question you should answer when you're trading a strategy. It's not, hey, what's my entry, what's my exit? that's actually very simple. What the hardest part is going out and identifying what currency pair to trade that strategy on, and that's what we talk a lot about in the course. So, Boyke, how long have I been trading? Since 1998. Is it available for all live accounts only? It is, but I have been given authorization to offer up a limited number of free logins for folks that are not live accounts. So just send me that email at jwagner@fxcm.com and say, hey, I want to join the live instruction tomorrow, or I'd like one of those free logins, and we'll look to help you out with that. You also gain access to 160 videos as well. So you got a lot of educational videos out there. But anyway, it is that's all that I've got for today. I've run out of time. Actually, if there's any other questions, I'll go ahead and take it here. It looks like I might have 2 or 3 more minutes. But I do want to say, a quick thanks out to Maud and Vicky for helping get this set up. And it's a pleasure working with you guys. You guys have been great getting this put together. And if there are no other questions, then we'll go ahead and call it a day. And don't forget about NFP tomorrow, non-farm payrolls. It's expected to really jolt the market, perhaps give the euro dollar a bit of a move. So we're going to watch that 140 level, 140.70 on the euro dollar, see if it can possibly push down below that. But until then, you guys have a great day, have a great Friday, and a great weekend. And we look forward to talking to you soon. Look forward to hearing from you guys. Bye now.